Shares in Meta and Microsoft getting a boost today on positive earnings. Our guest says these results reflect America's unique position as the world's innovator. Let's bring in Liz Miller. She's the president of Summit Place Financial Advisors. Liz, gotta hand it to America, okay? In terms of internet giants, it's the dominant power.
Yes, and these earnings yesterday, I mean, I know at this point it's a, hours long news, but both of them coming through with strong results at the top and bottom line, just showing both that the demand is steady there across their businesses, and both of them talking about pretty sizable continued capital investment for the future, which is what we know really is necessary for them to stay in the lead as they are.
Focus on Microsoft here. What do you think? Would you put new money to work in Microsoft? Would you buy the stock right now?
We are buyers of Microsoft. Of course, we loved it even more yesterday. It's having quite a bounce back. It's still quite a ways off its high. We need to keep in mind that, when we look at valuations here, it's hard to make a case on any of these. We know that coming off the last couple of years of a surge in all of the big tech companies, very full, rich valuations. But we're in a market environment right now where it's really difficult to assess what the right valuation is. And so what we take away from the earnings from last year and going through this year is these companies are still on trend. They're still growing. They're growing all their businesses, and they're investing for the future. So this stock is still, as I said, below its previous high. We think that is a buying opportunity for the future.
It is interesting, isn't it? Microsoft ramping up capital expenditure despite the economic worries.
History shows us again and again, those companies that continue to invest in economic uncertainty or even in recessions, get back even more than that in the future. It's the perfect time to be able to continue to invest. Some companies don't have the cash available to do that. These companies do, and I think it's just another source of their strength in our economy.
What about Meta? They too are spending heavily. And in the past, you probably remember over the past couple of years, at times investors have been worried about Zuckerberg's massive capital expenditures.
The results were strong again across the board. We are not owners or buyers of Meta, just not a part of our communications exposure right now, but very strong results and a continued commitment to expenditures and investing in, their goals.
I'm just thinking about the dominance of American websites, and certainly we here in the G7 country or in the Western world, that's so true. But China is not going away. I mean, they've made their internet giants such as Baidu or Alibaba have made inroads in markets such as India. So America's in a fight here.
It may be in the long term. What I think about when I talk about American innovation and the success of these companies is, time and time again, what we do see is we have a very competitive economic structure, but also a very innovative and flexible one. China has a more structured economy. They do allow innovation to a point. History at least has shown a fair amount of a heavy hand from the government in allowing things to innovate, flexible, try new things. I think that is always the United States' strength, even in times of economic uncertainty, is that somebody is in a garage right now working on our future dominance.
And of course, you have these deep capital markets that mean people can get financing.
Exactly.
Yeah, we here in Canada, that's a problem. Our big pension funds prefer to buy bridges abroad than invest in our economy. But I'm editorializing there. Have you any thoughts on Amazon? They're reporting, as you know, after the close. People are worried about tariffs because so much of their stuff comes from China and other Asian countries.
Yeah, we are owners of Amazon across all our clients, and we are a buyer of Amazon. We do think it is a very important company in the global economy and in the U.S. economy. We too are concerned in the short term, but I think that what we will see and hear most is that the uncertainty is the most difficult part of analyzing where Amazon has been most recently and will be. We think when tariffs are stabilized and we do know what the outcomes will be, we think companies like Amazon will be able to adjust, and consumers will still be looking online for, the best pricing and the best sourcing of many of their goods.
What about Apple? They are seen as vulnerable to tariff hikes, much higher manufacturing costs, if, of course, a deal isn't struck.
Exactly. And we are owners and buyers of Apple as well. So we're talking about a lot of the big tech that we do own. And what I would say as an owner of Apple for over 20 years is investors are always underestimating the long-term possibility there. There's a lot of emphasis looking at, the iPhone success out of China, in China, manufacturing in China. We do know they're already looking, and have been, of course, this is not new news, at diversifying sources and diversifying where product can be put together. It is a large company. It needs to source a lot of product components and a lot of manufacturing all over the world. It continues to try to do that. The reports out of Apple this quarter might be a little disappointing. We would say it's a long-term buying opportunity because we think they do know how to globally source and still be a leader in consumer products.
I have to ask you before we go, have you watched that Apple TV show Severance, where people at work, they can't remember what happened to them outside, and outside they can't remember what happened at work?
What a successful show, and it seems to be what gives us all some distraction this year, right? Yes. That exciting season end. So yes, I've seen it, I've watched it. But talking as an analyst about Apple, it's just one more diversified business for them that we forget about. We always think first and foremost the iPhone, and we should, but the company continues over the years to diversify into different businesses and different revenue sources. And I think Apple in 10 years will even have a different balance than it does today.
There's another good one. I'm not sure if you've seen A Dope Thief, about two small-time criminals in Philly. That's a good watch as well. Thank you very much.
I've missed that one. I'll have to look at it.
Thanks very much, Liz. Liz is president of Summit Place Financial Advisors.